Hello, I'm Dennis O'Hara with Century 21 Celli, and thank you for joining me for today's Lender Spotlight. Joining me today is Shant Banosian from Guaranteed Rate Mortgage. Welcome.
Yeah, thanks for having me, Dennis.
So we were just talking about it's been a pretty successful fall for you. You've got some closings coming up, and so talk a little bit about the current state of the market with interest rates and how's the fall market been looking?
Yeah, the timing of us talking is great. Here we are mid-November, right? And so it's been an interesting fall. So, market's still been active. Okay, even though the media will have you believe that there's nothing going on, there's definitely still transactions happening. So it's been a story of inventory and interest rates have been the dominant thing. So obviously inventory has still been a challenge. We're dealing with super low levels of inventory. There's less than 1 million homes for sale across the country, right? Some of the lowest levels of all time. And the reason inventory is so low, really two main drivers. Really, there's most homeowners currently have rates locked in at 2, 3, and 4%. Almost, I think, like 80% of homeowners have rates below that or no mortgage at all, right? So they're not keen on maybe entering the housing market and taking on higher interest rates when their affordability of their existing home. So there's that lock-in effect with the low rates that are preventing some people from listing their houses. Then there's a challenge of new construction is just not keeping up with the demand, right? In terms of, so like there's new construction happening, it's just not happening fast enough. So that's what's going to keep inventory low for some time. Now, the benefit of that is that home prices continue to accelerate. So because there's such little such little supply and demand exceeds it, home prices are continuing to increase. So we've seen home prices are now at their highest levels of all time. We've seen anywhere from 5 to 7% home price appreciation, even after years like last year where they appreciated, over the course of the last couple of years, prices are up 42% since the beginning of the pandemic, on average. So home prices are up. The challenge has been affordability, right? So interest rates have gone up and home prices have gone up. So at the beginning of the year, rates were about 6.5%. They went up over 7, and they went all the way up to 8% just in October. Okay, so like that was the big headline. Rates hit 8%, but here we are in the middle of November, and we've got some great news. Rates are way down since coming off those highs. So rates are closer to like 7% right now. So just in the last 2 weeks, they've come down almost at 1%. Which is awesome. It creates more affordability, it creates more buying power. And here's why. At the beginning of November, we saw employment starting to slow down. And then we've seen just in the last couple of days, inflation numbers coming way, way down as well. Inflation's down to 3.2 to 4%, depending on the index you're looking at, after having peaked last year. And those are two of the big things the Fed's looking for is inflation data and employment data. And now that those are, inflation's getting back down closer to where they want it to be and trending in the right direction, and unemployment's starting to, creep back up, they're likely to stop hiking rates. So the interpretation in the market right now is the Fed's done hiking rates, and that they don't think they're going to hike in December. And now they're even thinking a couple rate cuts next year. So I think we're past the worst of rates. But they're no longer 8%, closer to their 7. I think we're going to be starting to trend towards the 6s here. And we're actually already able to offer some clients in the 6s today, like first-time home buyers, some adjustable rate mortgages, some more aggressive down payment options. So that's great news. There's lots of savings out there. And it also means that a lot of people that bought houses this year and at the second half of last year are going to be able to start to refinance as well. So there's good news on the rate front right now.
Sure. Now, as far as refinancing, what are the rules around that, and how does that process work?
Yeah, so the good news in a state like Massachusetts, refinancing is super inexpensive, and you can. The rules are that you just have to qualify, right? So a lot of times we have to get the house reappraised. Not all the time. Your income and credit need to still meet the type of loan you have. Generally speaking, most lenders will want you to wait 6 months and make 6 months worth of payments before you refinance, but that's not the case always. Certainly, we have plenty of exceptions around that as well. The good news is that as home prices have gone up, even like some people that bought last year, you can drop or eliminate your PMI, get a lower interest rate, save some money. Interestingly, we're also seeing a big uptick in cash out refinances. The one thing we're seeing there is because equity is high, the highest level ever, we're seeing some clients, utilize some cash out to pay for renovations, pay for home improvements, and also do some debt consolidation. Unfortunately, credit card debt is also at the highest level it's ever been. So we're seeing some clients take some equity out, pay off things like credit cards, because those rates are, north of 20 and 30% right now. Refinancing is very, very popular. That's another thing that we're seeing in the market. So my forecast for next year are lower interest rates. I think we're going to be in the sixes and possibly even in the high fives by the end of the year. So I think we're going to see, more demand every time rates go up go up or go down. So for example, when rates are 8% and they've come down to closer to 7, 5 million people re-enter the market, right? In terms of affordability. So if rates tip into the sixes and even fives, you've got a bunch of people that rush back into the market that have affordability and excitement, and have a need because they've been boxed out of the market this whole time while they've been waiting. So I think next year the demand is going to be very, very strong. My guess is that the spring market is going to have lots of bidding wars, just like it has the last couple of spring markets. I think inventory will remain low, like I said. So my advice to potential home buyers out there is, like, right now in November, in December, in January, there's much less competition. People are distracted with the holidays. There's not as much motivation because, they'll wait till next year, whether if they have to move school systems or if there's a lease expiring and stuff like that. Yeah. Right now is where I'm seeing a lot of my home buyers have success with less competition, and it's still a great time to be a seller because there's also less competition on the listing side. Listings are down and equities at their highest level ever. So, the cool part is if you put your house on the market right now and you do get an offer, you're dealing with a pretty serious buyer right now. The market is definitely more balanced out right now. But I think that's going to be short-lived once the spring market kind of rolls around, where you're going to see it get kind of bananas again.
Yeah. One thing that we've been noticing, and I think this is probably a product of both the pandemic and also businesses going a lot more digital now, is that there's more commercial space for rent, small commercial units, yeah, where sellers aren't necessarily looking for highly experienced commercial real estate agents, and so they're actually taking on the smaller local agents that know the area to represent their property. So I want to know what you could tell me about sort of comparing the process of going for a commercial mortgage versus a residential mortgage.
Of course. So when you do take out a residential mortgage, which is what I'm an expert in, we're underwriting both the property as well as the more importantly, the borrower. So we're diving deep into your credit, your income, your assets personally. Mm-hmm. And then we're obviously looking at the collateral as well, but we're literally just putting the mortgage on the collateral. So it's not as deep of a dive. On a commercial property, we're really looking at the property first. Okay. And what I mean by that, well, not we, because we don't do commercial loans, but a commercial lender is looking at the property first to see how much expected income can that property generate and then comparing that to the expected mortgage payment, right? And the available rates and down payment, all that kind of stuff. So it's all about looking at the property as being self-sustaining, or what kind of income it can generate as a commercial property based on cap rates and all that kind of stuff. Then they're looking at the borrower as kind of secondary, as like almost like a co-signer, even though they're the main borrower, so it's property first, applicant second, whereas in the residential world, it's applicant first, property second, right? And we are seeing a big uptick exactly in what you're saying, especially in the suburbs, smaller commercial places, as the commercial office market in big urban markets becomes less desirable and more people are working remote or working, not in the city and commuting and all that kind of stuff. We're seeing a big increase in desirability for commercial properties in the suburbs.
Yeah, absolutely. Great. Well, so here we are mid-November, and yep. One of the things that we push when we're listing Stoneham properties is just what an active community Stoneham is. I mean, we have our Chamber of Commerce decorates the common with a tree, and the zoo puts on the zoo lights here, and so that's actually really attractive to families looking to relocate.
My family loves it. I have little girls, and I bring them to that zoo all the time. Actually, our favorite time of year is in the wintertime.
Yeah, is it? Yeah. So, any other big holiday plans for the Banosian family?
It's our favorite time of year. I have 3 girls, 11, 8, and 5. They fortunately all still believe in Santa Claus at this point. So it's a big time of year, and they're all playing hockey, so it's a lot of hockey games as well. So
Wow.
between Christmas, Thanksgiving, and hockey season for all three kids, we're fully booked at this point. Hopefully, I'm busy with rates coming down a little bit. It creates more activity in the marketplace as well. So hopefully, it's a fun holiday season.
Yeah, absolutely. Well, Shant, thank you for joining me today. It's been a great conversation as always. Anything you'd like to close with?
Yeah, you know what? I would say what we're seeing in the market immediately right now that's helping a lot of home buyers. If you're a real estate agent or a potential home buyer, temporary buy downs and permanent buy downs are really helping. And what they are is they're ways to get lower interest rates and help with that affordability. So for example, like the most popular product that we're seeing is a temporary buy down. It's a 2-1 buy down. So let's say the average 30-year fixed rate is 7%. Well, that means in the first year you can get a 5% rate, second year 6%, and then it goes to a 7% 30-year fixed rate. But the hope is that over the course of those first 2 years, you'll be in a position to refinance, take care of lower rates anyways. But in the meantime, it helps create some affordability. And there's also probably the biggest benefit of first-time homebuyer products that we've ever seen, discounted rates and fees for first-time homebuyers that are rolled out by Fannie Mae and Freddie Mac. Again, trying to help combat affordability. So if you're a first-time home buyer, or if you're just any type of buyer these are things that you should be aware of. First-time home buyer benefits, temporary buy downs, permanent buy downs. These are something you should be talking to a lender about to help understanding all the affordability options out there so you can get into the housing market, because getting in is key, right? Homes are going to appreciate over the course of time. So the sooner you can get into it, the better it is for you in the long term.
Absolutely. Great. Well, if someone needs more information and wants to chat with you, how can they do that?
Shant@rate.com is my email address, shant@rate.com, or you can always call or text me at 617-827-6674.
Right. Well, thank you again for joining us today, and hopefully we'll get to do another one of these in the future.
I love it. It's always fun.
Thanks, Shant.
Yeah, you got it.